All right, so we are now recording. Um, Welcome everybody on I guess this Friday morning, day after Halloween. Today we're going to walk through a presentation of an introduction to retail recovery auditing. Um, I guess just to jump right in on who we have on the call. My name is Ben Evans. I'm the president over at Auditing Solutions. Live in Gilbert, Arizona, with my wife and three little girls. I've been with Auditing Solutions for about 7 years now. I've been in the recovery audit space, more on the non-merchandise side for closer to 15 years. Um, because I'm much more focused on that non-merchandise side, and that's where my experience lies. I've asked Lindsay to come and join us because she's an expert on that merchandise side. Lindsay, can you give a quick introduction on who you are and your background?
Sure. Yeah. Welcome, everyone. I'm Lindsay Lyon. I'm an audit manager with Auditing Solutions. I've been in the recovery auditing for almost 30 years, and 20 of them have been here at Auditech. Um, I really enjoy the work we do, so I'm excited to be here to talk about it.
Great. So again, I'll be relying on Lindsay as we go through some of these topics, expand on um, on her expertise. So, and then Damon's with us as well. Damon, do you want to do a quick introduction?
Yeah, not quite as long as Lindsay, but I've been in the recovery audit space for 12 years. The last year is the business development, but certainly excited to get a little deeper into the merchandise auditing.
Great, awesome. Well, we'll go ahead and jump in. We set this meeting for about 45 minutes. I don't expect it'll take us that long, but I can be long-winded, so maybe. But we'll kind of get through it. If we have a smaller group than we had registered today, so feel free to ask questions as we go through it. More likely than not, you're watching this presentation after the event, and in that case, feel free to reach out to myself, Damon, or if you want a good answer, reach out to Lindsay on LinkedIn to be able to ask that question as you run through this. We're available and kind of happy to share our experience in this space. So jumping right in. So as a quick introduction, retail recovery auditing, this is at a high level, it's a systemic approach where we're looking for retailers to identify and be able to recover overpayments, under deductions, and financial discrepancies. A big focus of a retail recovery audit, and I think more so now than even 10 years ago, isn't just on the actual dollars that a company can come into and recover and bring back their organization, but actually helping to drive financial accuracy and to drive process improvement as they move forward. Um, Retail recovery audits are probably more critical than ever in today's environment to be being performed. One of the analogies I like to use for any type of a recovery audit is the concept of a pen test. So I know we have some of our IT resources at Auditech on the line right now. If a company really wants to find out if they have a secure environment uh, from a data and IT security perspective, one thing that I think they're required to do, but one thing that they do is they'll hire essentially professional hackers to come in and try to find the holes and the gaps in their IT environment. It's called a pen test. I know Auditech Solutions, we have outside firms that come in and try to essentially break and find the holes in our environment so that we can get an idea of where those holes exist. I always view, and I don't know if this is a good analogy or not, but I always view recovery audit, especially in the retail recovery audit space, as the pen test of your accounts payable process. Where you're bringing in people who are looking to find those holes and gaps. 99.9% is probably working well, but there is still that 0.1, and when you're dealing with the massive amount of transactions that you do in a retail environment, that's a material issue. And by hiring retail recovery auditors, you're able to come in or performing work internally, I should say. So whether you use an external firm or you're doing it internally, you're able to kind of come in and have people try to break and find where those holes are. For me, that's really where I view the benefit of having a retail recovery audit. Um, moving forward. So what is a retail recovery audit when we're talking about scope? Today when we're using the terminology retail recovery audit, I'm generally referring to merchandise. My experience personally is a little bit more on the goods not for resale side or the non-merchandise side. But on a retail recovery audit, we're talking about the actual things that are in on the shelves. What types of issues are we seeing in this space? Well, one category that's very common is duplicate payments. I think people assume that duplicate payments don't occur in the year 2024, but they occur just as much as they ever have. And a lot of this is related to the fact that there are system changes. The pace of things changing at organizations is so much faster with offshoring, AI, turnover of staff, COVID, um, uh, supply chain issues. Those shifts generally are where we see the drive that causes duplicate payments. So duplicate payments that exist today in a retail environment are different than they were 30 years ago, but they're still very significant. And duplicate payments, and I'll give some time for Lindsay to expand some more, but duplicate payments can be things where you have two payments to the same vendor. It can be things where you have a payment going out to two different vendors that should have only gone to one. It can deal with P cards where you have individuals that are using P cards and they're also having purchases that are running through the PO system. It can be the same payment running through two different systems and probably 5 or 6 other areas that I'm not familiar with. This is definitely an area where I think a lot of retailers who aren't performing a recovery audit regularly find out that they assume that this is being covered by their ERP or their payable system. Because there is functionality in systems and tools today to be able to prevent this, but because of the constant shift and changes, errors still occur. The next section is pricing errors. This can be as simple as charging $6 when you're supposed to be charging $5, or it can be very complex when we deal with complex pricing arrangements. Missed discounts, whether we're talking about discounts at the point of sale, the point of purchase, or annual discounts. We see a lot of issues in this space. Unclaimed rebates. This rebates, allowances. I know. Again, with my limited experience in the retail recovery audit space, this is an area where we've seen a lot of dollars that are out there available to a retailer but aren't being taken. With that, I'm going to take a break talking and Lindsay, who's been doing this for over 20 years. Can you kind of elaborate on kind of your view on why are these mistakes still happening, and how do you typically come across them? How do you identify that these are happening in an environment?
Yeah, so I would say one of the best places for us to find errors would be emails. Terms and pricing are frequently revised throughout the year, and they are mostly through email discussions. This can result in a lot of back and forth, which can lead to discrepancies between the initially agreed terms and the final records. So we're able to kind of comb through those emails and find what the actual finalized expectation was and ensure that it happened properly. In addition to utilizing emails, we can also identify errors by carefully reviewing the transaction details, verifying all the documentation provided to us by the client, and analyzing patterns, which can identify discrepancies that routine processing might miss. So we're just kind of able to take a more detailed approach of reviewing all that information to ensure that what was expected is actually what happened. And if not, then we're there to correct that.
So I'm interested if you can expand more on the email side. So in the cases where you're finding things in emails, is it typically the case where an agreement's made with the supplier in an email that doesn't make its way into the more formal systems? Is that
Yes.
typically what we're talking about?
Yes, and also some of the conversations can go on for a really long time, negotiating back and forth. The longer the conversation, the easier it is for it to kind of get lost in the email.
Okay. Yeah, and this is, I mean, we don't have a slide for this, but I think this is a really important topic on a retail recovery audit. When Lindsay talks about using email, As an outside firm or internally, audit teams can gather email files from buyers, make sure that they're restricting any personal information or whether it's PPI or PHI, and use that to look at what's actually being negotiated. And I've talked to Lindsay a bit on this. What she's typically talking about, you'll have a buyer that will either in a single email or a chain of emails over a longer period of time negotiate special terms, agreements, pricing, discounts, rebates that don't make it into the ERP system. And so in those cases, you're negotiating value. Your buyers are negotiating value. They're getting value with those vendors, but you're never getting it because it doesn't make it into the formal system. And especially when we see turnover of staff, if Lindsay's a buyer at an organization and she negotiates something, then she leaves and I take over her spot, it doesn't make it into the system. It's not common that the vendor's going to raise their hand and let you know that you're paying more than you should be. So I think it's definitely a best practice in a retail recovery audit to get to the point where you have an email audit, where you're actually looking at those files. I think it's definitely an area where legal compliance are normally going to be involved. It's important to have notice. I was actually just talking to a client last week about this. It's important to make sure that those who are going to have their emails taken have notice prior to the event, that's going to be something that auditors are looking at. But the amount of dollars that an organization can actually bring back by including that in their retail recovery audit is significant. So thanks for that insight, Lindsay. So moving on to the next slide. What's the process for a retail recovery audit? And this is, very similar for really any type of recovery audit, but we start with the data collection phase, right? So when we're dealing with a new client on our side, or whether it's a company that wants to embark on having their own recovery audit internally, one of the first things you want to identify is what data sources exist. How are we going to gather those data sources? How are we going to normalize the information, put it in the hands of the auditors and the technology that's going to create or find discrepancies? This process should have, again, legal and compliance involved. IT obviously would be very involved in this process. The finance and AP department are pretty critical in this as well. The more data, in my view, and Lindsay could correct me if I'm wrong, but the more data, the better. So if you have access to the actual invoice images, if it's an external firm, obviously internal would already have access to that. Like we said, email. I've even talked about with recent clients where they're even getting into Teams chats. Like right now we're on a Teams meeting, but we're starting to see buyers negotiate deals, pricing, rebates, discounts in Teams chats, where it's terms are happening in there. So companies are even beginning the process of saying, hey, we're not just going to ingest emails for our buyers so that we can look for potential, overpayments, but we're going to ingest Teams chats between our buyers and their vendors so that we can make sure that anything that we're negotiating from the perspective of value is actually being captured. Once you have all of your data collected, you're looking at data analysis. Lindsay's already highlighted it. The first thing you want to do in a recovery audit is try to do the analytic side of things. There's an endless number of transactions in these environments. Where do we see strange behavior in payments, things that are inconsistent with prior payments, things that don't fit on a high level, and then dig deeper into that after that initial analysis has taken place. I know I think I did a podcast with Rich Lanza. If you go to I think it's on the Auditech LinkedIn page. Rich Lanza is kind of a pioneer in the recovery audit space, has moved on to more traditional audit at a large accounting firm. And during that podcast, he talked a lot about the need at the beginning of an audit to do analytics-based testing to determine where you're going to look. as opposed to just going through every single transaction. Where does the data tell us we should spend our time? And so, Audit Tech Solutions, us as a recovery audit firm, that's where we try to start. We recommend the same thing for internal teams, as opposed to just testing everything. Use data analytics tools and platforms, and we'll get into some of that later on in this presentation, to be able to guide and direct where you're going to be performing the audit. As that work's being done, claims are going to be identified. And I actually like the term of potential claims that are going to be identified. I mean, I guess they are claims, but you start to see potential discrepancies. And as that happens, we need to begin the process of validation. And I'll let Lindsay expand on what we do to validate a claim, because, as a firm that's been doing this for 24 years, our clients only see a fraction of the claims that are initially identified, because once we identify them, we move into that claim validation phase where we need to say, hey, yes, this looks like a claim initially, but is there something we're missing? We try to do as much validation as possible before our client, and definitely before their vendor ever sees it. And then we like to make sure that we're very aligned with our clients and their vendors in performing validation through kind of their expertise and their background. And then ultimately we move into, the actual recovery. Once we've vetted and validated a claim, we have shared it with the client, shared it with the vendors. We're going to move towards actually recovering the dollars, and then making sure we're doing reporting that not only summarizes the benefits of an audit, or the actual recoveries of the audit, but focuses on where are these occurring and what potential actions can be taken to make sure that they don't occur moving forward. That's, as I've talked to a lot of prospective clients in this space, I'd say more and more since the pandemic, organizations are focused on process improvement and closing the gaps. An effective retail recovery auditing program doesn't just recover dollars, but has a strong track record in closing gaps and making sure that the same issues aren't being found over and over again. So I'm going to ask a question to Lindsay real quick. So on the claim validation side, Lindsay, what are we doing? I mean, so is we have, let's say, 100 claims, potential claims are created. What's typically the process to test those claims, make sure that they're valid before they're being shared with a vendor?
Sure. So I'll go over this it's a step-by-step process. Step one is internal validation. Once we've identified an issue, we utilize all the pieces of information and data provided by the client to ensure accuracy. And then once that due diligence has been completed, we put together a claim to present to the client. Step two is presenting that to the client so that we can confirm that we're aligned with them on what their expectation of what should have happened. And then we move forward with presenting this to the vendor. So that's the third step. Typically claims are sent out on 30-day notice before any deduction happens. This allows the vendor an opportunity to review the claim and notify us if their expectation or records reflect anything different. It's really a partnership with us, the client, and the vendor to ensure that we're all aligned. So the vendor portion of this is really important. So we work really closely with our clients to ensure we have the correct contact information. We want to make sure that the right person is being notified of the possible discrepancy so we can obtain the feedback from them. So that's the 3-step process in that.
Yeah. And I think this is a big kind of a harping point at our company is the concept of getting that feedback from the vendor. Obviously, when we're working with a client, we want to make sure all the stakeholders, have given us feedback. But as you're performing this work within a retail organization, we found success obviously in using emails. We've moved into Teams chats where we're actually chatting with vendors, but even holding not face to face, but virtual discussions with vendors to vet through issues is extremely effective. And I think I've seen bad practices interacting with vendors kill recovery audits more than probably any other issue. Meaning that if you're looking to implement a recovery audit for the first time, and again, we have a pretty broad audience who might be watching this on YouTube later, right? If you're considering doing a retail recovery audit for the first time, or you're considering improving a retail recovery audit, I I would say that the most important issue, or the thing that is most likely to derail it, is having bad vendor relationships. And so, I know Lindsay and her team are really good, and we have, Caitlin on the line as well, from our firm that kind of leads this from the communication perspective. But they're really good at making sure that the vendor has a voice. Like Lindsay said, it's a partnership between the audit team, whether it's an internal audit team at a retailer or an external firm, and the vendor, in ensuring that these claims are accurate and that they are actually correcting, valid issues. And then once we move past the actual claim and the recovery, I think it's a partnership to make sure that the right information is going to the right stakeholders within a retailer to close the gaps moving forward. So, the biggest takeaway I would take from any of this presentation is you're doing a retail recovery audit. Make sure that the vendor has a voice. Make sure you're working with them in a professional manner, and make sure that you're getting their feedback. So moving on. So why are retail recovery audits important? Already touched on a few of these things, but obviously the first reason that anyone thinks of a retail recovery auditing, being of value is there's actual dollars. Dollars come back in your organization. You're able to identify overbillings, overpayments that have existed in the past, and you're able to bring them back in. The second you start to get more stakeholders involved in a retailer, process improvement becomes even more important than financial impact. People, organizations, companies want to see less dollars going out erroneously at the point of transaction. And so by doing a recovery audit, again, going back to that pen test example, you're able to see where the holes are, and then you're able to create strategies to close those holes. Enhanced vendor relationships. This goes back to that last slide and that concept of vetting. A good recovery audit should make healthier relationships with your vendors. A poorly executed recovery audit can strain vendor relationships. A good one can make sure that we're more aligned, that the expectation of a retailer and their vendors are the same, and where there are differences, alignment can be reached, and we can move forward with the better, kind of holding hand in hand, right? So I think that's it. That's an under. I think that's not enough of a focus of what this work can do. I always like to use the concept of, any type of recovery audit is marriage counseling between a retailer and their vendors. There may be some tough things that need to be discussed. There may be some issues that need to be worked through. But as we work through those things, we have a better understanding and we have a stronger relationship moving forward. Risk mitigation. We don't focus, a ton on this from our perspective, but performing a recovery audit, you're reducing your risk because there are less financial issues than if you didn't perform that work. There also, when you talk about financial reporting, compliance, and accountability, performing regular recovery audits make it much more likely that you're not misstating things such as accounts payable, cash on hand, amounts due back to an organization. I'm sure there are other, compliance and accountability perspectives, but as a CPA, that's the thing I think of. A recovery audit makes sure that that your books are actually recording the economic value that's happening in your business interactions. Lindsay, I don't any expansion on this side? I mean, any additional thoughts on these topics?
No, I think you covered it pretty well.
Okay. You just feel free to correct me anywhere where I'm wrong here. So, So the breakout of an accounts payable audit, there's really two categories you can place everything into. I talked with Lindsay as we were preparing for this meeting earlier this morning, um, to talk about kind of what level we're doing. But at a high level, things are in either the accounts payable bucket or the vendor management bucket. So we're talking about the accounts payable focus of a retail recovery audit. We're talking about duplicate payments, pricing errors, missed discounts, things that should come out in the general AP process. And it's important to break these things apart as you're planning a retail recovery audit, because the stakeholders that you're going to be interacting with within your organization, if you're at a retailer, are going to be different on the accounts payable side than they are on the vendor management side. On the vendor management side, we're talking about things where the buyers are much more involved. On the AP side, it's much more the finance, accounting, and AP functions. Vendor management, we're looking at things like unclaimed rebates, unapplied cash, wrong supplier payments. As I went through this with Lindsay prior to the call this morning, these are high level buckets, and under each one of these sections, there's many sub points, right? There's many different types of unclaimed rebates, and almost an infinite, depending on how contracts are written up and applied. So, any additional context on these ones, Lindsay, or examples you've seen?
No, not without getting into the details of all of them. This pretty much covers the high level categories, I would say.
Great. Moving on. Make sure I got my slides here, right? Okay. So audit tools. There's a lot of audit tools that are used in this process. So first off, there's proprietary software. So Auditing Solutions is a recovery audit firm. There are many, other recovery audit firms in this industry. They all have proprietary software. They have proprietary software around claims management, the actual creation and life cycle of claims. There's proprietary information around proprietary software around email auditing tools. There's actual analytics tools that are used within recovery audit firms, duplicate detection. There are algorithms, items like that are meant to, enhance the ability of a third-party auditor to be able to perform this work. Sometimes those tools are actually placed into the retail environment. So retailers will often have an internal team that performs a retail recovery audit initially, and then may even have both a first pass and a second pass firm. This proprietary software that's generally created by recovery audit firms can be utilized by internal teams, and often is. I know we have some clients that utilize some of our internal tools. Some more general tools that aren't specific to recovery audit should be used in this process, or often use this process as well. Data analytics platforms, SQL Workbench, things like Caseware Idea, and SAP tools are analytics platforms that organizations and recovery audit firms can use to perform some of the analytics that need to happen at the beginning of a recovery audit. What we're starting to see, and I think any presentation that you're going to in the year 2024 is going to have at least a mention of machine learning and AI. Machine learning and AI is becoming very big topic in the retail recovery audit space. The two areas that I see it really being a focus is first the large language, I think it's large language processing models. That AI is getting pretty good at being able to take a lot of documents and be able to summarize and find out where key points and terms are, to either guide auditors or to potentially even perform some testing themselves. The other, machine learning I see that's not maybe directly in the retail recovery auditing space, but it's more at the point of transaction, is the AI that's happening as things are actually being processed. So ERP systems are using duplicate prevention tools, for example, and machine learning is starting to come into that, where it's getting it's able to look at that specific environment. It's able to look at what errors are occurring in that environment and proactively prevent them on a moving forward basis. So this area, I mean, I'm probably not the right person to get into extreme depth in this, other than to say it's a hot button topic right now. How can we be using these tools to, one, organizations, retailers are wanting to make sure that things are happening right the first time, but two, how can we use this stuff to analyze our data and be more efficient in being able to identify potential erroneous transactions and move towards recoveries. Real-time reporting software, as an audit's moving forward, it's important that stakeholders actually know what's going on and how things are moving forward. We have dashboard interfaces, things. We use a tool called ClaimsWeb that allows anybody, any stakeholder within the organization to be able to see where's an audit at any given point in time, to be able to dig into actual individual claims with the supporting documentation that's related to those claims, to give alerts, regular updates, reporting, to be able to have summarizing executive and leadership reports as large recoveries are taking place. These issues need to roll up into higher level management and executives, and a good real-time reporting tool allows you to do that quickly and in an efficient manner. So data security is critical. Retailers, I think just in the last decade, there's definitely been some newsworthy hacks, I guess, where organizations are having data that's getting, and so the financial information of an organization is critical. So as you're performing a recovery audit, whether internally or externally, it's critical to make sure that you have good encryption and data protection and compliance processes. On the technology side, integration with existing systems is another critical thing. APIs and connections between systems can make a recovery audit much more efficient and much more likely to identify issues. And so even having tools that have plugins directly into your ERP and accounting software puts you in a position as an organization to much more efficiently analyze large information in its native environment and to be able to pull insights in that. So automation tools are another thing. I think we had a presentation at our AuditCon event earlier in the year by a man named Chuck Phillips, who had 30 plus years in the recovery audit space, and I think the term he always uses pulling it forward and performing audit work, financial recovery audit work closer to the transaction. AP automation really is making this more and more possible, month by month, and organizations are able to perform closer to real time analysis of their financial transactions. And retailers in many cases are in some areas are even able to perform audit work on transactions prior to payment, even where they're looking at, actual invoices, POs coming across, reviewing them, looking for discrepancies and errors prior to the payment taking place. That's where I see a lot of the AP automation focused and heading is let's bring things, like as Chuck would say, pulling it forward closer to the transaction, or even in some cases prepay. Big focus for a lot of our clients and some of the prospective clients that we've talked to over the last 2 or 3 years. So, Lindsay, I may have, let's see if this slide or the other one. I wanted to ask you a little bit more on process improvement, and I think it's probably a slide back, but can you kind of walk through an example? I know we talked. This is a little bit of a prep question, but can you walk through an example where you as a recovery auditor identified a significant issue and you had a tangible example where it was led to a process improvement and the gap was closed?
Yeah, absolutely. We had a large retailer that was missing out on millions in new store allowances each year. And we identified this issue was based on the fact that they were only grabbing the new orders placed to stock the new store. But there were a lot of warehouse transfers to stock the new store that were being missed. So this was a hole that we found, and we were able to work with them to fix it. So going forward, that's no longer an issue. Anytime we double check that they've gotten all their rebates for this allowance, we don't ever find any errors anymore.
Yeah, I think that's a critical focus, right? That we're making sure that we're not just recovering the dollars, but closing those gaps. Common challenges in a recovery audit. So again, like I said, we have some of our IT guys on the line right now. Data quality is huge. So as you're beginning a recovery audit, you start to import data, whether you're an external firm or you're performing an audit for at a retailer for your organization. Making sure that the data has a high level of quality, is aligned, especially when we see systems that are shifting, especially when we see, there was a transition from one ERP system to the other. I know our IT team, is we're beginning a new audit or we're just kicking off a new year. They spend a fair amount of time just making sure that they have, I don't know if the term is enriched, but have structured the data in a way that's going to be efficient and effective for auditors. By making sure that you've done that work up front, you can save a ton of time on the back end with auditors trying to chase down, things that are potential errors that maybe wouldn't be if the data was structured well, or being able to look across different systems. So beginning of audit, I think it's critical to look at that. Vendor cooperation is a big one. We'll talk about solutions to this in a second. Internal resistance. So at a retailer, it's not uncommon to have a recovery audit viewed as a threat to certain members of the organization if it's not presented correctly. No one loves the word audit. No one likes auditors. And there's some defensiveness often. Complexity of transactions, that's pretty self-explanatory. And then just time constraints. Organizations have a million things they could be doing. Do I have time for this? The solutions to these issues, I've already talked about the data quality issue. Vendor engagement, on the vendor cooperation side, it really is how it's communicated to the vendors, and let them know that this isn't, it's not a witch hunt. It's errors do occur. We expect errors to occur to some extent, but we expect them to be addressed, resolved, and to be fixed moving forward. I think if that is shared, 99% of your vendors are going to be very comfortable with that. So, how an audit is framed is you're beginning a new audit as a retailer, will have a strong effect on how vendors engage with you. Same thing with the internal buy-in. When you're working within, like, say, a accounts payable department, letting them know that, hey, this, we're going to find errors, and that doesn't necessarily reflect poorly on you. That errors occur. They occur for a myriad of reasons. And it's just a best practice to identify and recover those dollars. I've seen, more audits get, slowed down than I'd like to count, because, the internal groups feel threatened. They feel like it reflects poorly on them if errors are identified and recovered. I think making an audit non-threatening and really just, view of a best practice is really critical to having success. In the opportunities where you can simplify complexity, that's always better. So when we talk about complexity of transactions, our terms, our things structured, our allowance is structured in a way that can be efficiently audited. More importantly, are they structured in a way that can be efficiently processed? And then time constraints, planning is critical. These audits are very, very easy to let these things drag on. So, setting up efficient plans and sticking to them, and making sure that stakeholders are providing data and feedback, and vendors are providing feedback in time is critical in these projects. So I see those as some of the solutions to the common challenges we face. So on the question and answer side, I know we're a little bit tight on time, so I'm gonna skip past that. I know a majority of the individuals who are going to join this will be watching this after on the YouTube channel, on the Auditing YouTube channel. If you have any questions, again, feel free to reach out to myself, to Damon, really to anyone at Auditing, to Lindsay. We'd love to talk to you about, what our expertise is, what, what we find to be best practice in the space, what we're seeing in the industry. If you're watching this and you're considering doing a recovery audit, would love to talk to you about what that looks like. We won't give you the hard sell, but obviously we believe in the process. If you're considering, if you're at a retailer considering expanding your recovery audit process, again, would love to have that discussion. I know a lot of people who participate in these online events and watch the videos afterwards are recovery auditors. We're happy to also knowledge share in that space, even if you're at a competing firm. So, the big call to action, I would say, in this presentation, for at least from my view, is to really plan out your audits well and make sure that you have a heavy level of alignment internally and externally, and that you're actually, I think Lindsay used the term partnering, or partnering with your vendors in the process of getting accuracy and transparency. So with that, I don't know, this is a Teams call, so I'm afraid it's going to cut us off at the end of it. So I'm going to go ahead and close the presentation. This will be up in the YouTube channel probably in about a week. Anyone who's registered for this thing will receive a link, and we thank you for your time today. Thanks all.